Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. As we get everything you need to know in 90 seconds at 9 o'clock, with news the US Fed has given its expected liftoff signal. The Federal Reserve has confirmed it is changing its policy direction. They have signalled interest rate rises will likely start in March, their first since 2018. And they have accelerated plans to unwind their easy money policies for the US economy amid sharp rising inflation. Overall, this is pretty much what the financial markets had priced in. In immediate reaction, US Treasury 10-year yield has risen to 1.80% and the US dollar has firmed slightly. And the S&P 500 has risen from what was already a strong day of gains. Meanwhile, in other news, US new home sales rose sharply in December to just over 57,000 in the month, the fastest sales rate since September, but bringing the total actual new dwellings sold in 2021 to only 762,000 and a 7% drop from what it was in 2020. But prices rose, with the median up more than 16% to $393,000. And American mortgage interest rates moved up sharply again last week, back to pre-pandemic levels, and the level of mortgage applications fell at the same time, and also quite sharply. Surging imports, probably in response to supply chain difficulties because retail inventories are leaping, have pushed the US trade deficit up to $101 billion in December on a seasonally adjusted basis. In related news, the US is warning that the supply chain crisis for semiconductor computer chips isn't getting resolved, and the only solution is a massive reshoring program to build most of their requirements at home. In Canada, their central bank reviewed its policy positions overnight, leaving its core rate unchanged at 0.25%, but they have set the stage for rate rises in March, mirroring the US Fed. In China, they're having to face up to some failed ambitions in developing their semiconductor industry. And China is looking at sharply reduced levels of foreign direct investment in 2022, promising new incentives as it contemplates a painful pullback. And the US Treasury 10-year yield opened today at 1.78%, up another 3 basis points from this time yesterday, and then added another 2 basis points on the Fed announcement. And the price of gold starts today at $1,830 an ounce. That's $18 lower than this time yesterday. And oil prices start today up by another $2.50 at just on $87 a barrel in the US, while the international Brent price is now just over $89 a barrel. At these levels, this commodity is at its highest since 2014. Ukraine tensions aren't helping, of course. And the Kiwi dollar will open today marginally firm at 66.9 US cents. Against the Australian dollar, we're fractionally lower at 93.3 Australian cents, and against the euro, we're a little firmer at 59.3 euro cents. That means our trade-weighted index starts today at 71.4 and marginally higher overall. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.